Yo guys, welcome back to Stock Talk Insider. Today we'll be talking about inflation and of course the PPI data that came in today. So as you see, the VIX is at this point at 15.22. It jumped up very high because the PPI data came in very higher than expected. We started the day with 14.60 around those levels. So yeah, that's already a little bit of a bigger increase in the VIX, and of course a very big increase in the PPI data, which is, well, core producer prices rose the most in 3 years, as the title in Yahoo Finance says. So I want to take you guys into a little bit of information that I get together, so to give you guys a very clear idea of what this could mean and would possibly be the answer to the market in coming months. So let's get straight into that. So hey everyone, welcome back to the video. Today we're diving into the macroeconomy, why the market has been dropping, what the latest PPI data means, and why Powell is likely not cutting rates anytime soon, or probably just a little bit of rates to cut, but I'm a bit bearish on that thing. So yeah, if you want to understand how inflation and Fed policy really drive the market, stay tuned. So if we just look at the portfolio today, we were at around 25,000 profit. We are already down 1.4% today because of that data. But yeah, there are probably some recession fears coming out of this data. So PPI, or otherwise Producer Price Index, measures price increases at the product level before goods reach consumers. Why it matters: higher PPI is higher cost for businesses, usually passed on to consumers. So that means that you just, again, will have to pay more than before. It's a leading indicator of inflation. Recently, PPI came in worse than expected, as said before, also signaling the inflation is still very much present. So we're actually almost there with no inflation, just an easy feeling on the market, enjoying the highs, but no, of course, it's not under control anymore, as a couple of months ago. So persistent inflation increases the chance that the Fed keeps rates high. Rising bond yields, growth stocks become less attractive. Investor sentiment, markets no longer expect quick rate cuts, triggering a short-term sell-off, like at this point. So yeah, also you're just going to have to pay more, as said before, and in short, a bad PPI report often means temporary pain for stocks as investors anticipate tighter monetary policy. I'm not selling anything because I already have a big cash pile, of course, so because I did know that something like this would happen between these months or these periods. So yeah, going through Powell and the Fed. Why isn't Powell cutting rates now, or wasn't it cutting before? Inflation control is top priority. Cutting now could spark inflation again, and that is stagflation risks, which is one of the biggest fears on the market. Stagflation is literally a no-go. It is high inflation plus low growth. The Fed would rather risk a mild recession than years of runaway inflation, which means maybe more than one recession and very more harsh recessions than before. So yeah, historical context: Powell wanted to cut earlier, but Trump, tariffs, and pandemic policies made it risky. So now it's too late for a soft landing without reignition inflation. Bottom line: the Fed prefers short-term market pain over long-term economic chaos, which I stand behind for, of course. PPI rises, so inflation persists. Fed keeps rates high, stock under pressure. Powell avoids stagflation. Market bleeds now rather than later. That are some simple infographic things. So the market is dropping because inflation isn't under control. The Fed is keeping rates high and investors are bracing for short-term pain. Powell's focus is credibility and avoiding stagflation. If you found this helpful, hit the like, subscribe, and I'll see you guys later. And this was a little bit of my information that I wanted to share. But at this point, just to make sure for you guys, I am not selling anything because I'm in here for the long term, and a big drop or a recession, small or big, I'm just staying in and buying more and more and more, because that's how I gotten to the levels I'm at now. I have already a big cash pile, and I'm adding more to it in the coming 2 months, of course. And I do believe that we will have a little harsher of a end of the year than we had in the last 2 years. So yeah, brace yourself and just prepare yourself for the worst, of course. But you don't have to sell everything, because you need to keep capital in the market, of course, because you never know where the market is going. But at this point, I do believe that it is a safer option to have some cash around, to keep it in, to put it into the market at every point needed. So thanks for watching, and I see you guys later.